You sit down at your desk with a carefully constructed plan. Your levels are marked, your indicators are aligned, and the setup is clear. But hovering quietly in the back of your mind is a heavy number, your weekly target. You need this setup to work to hit your goal. Then the market makes a sudden, unexpected dip. Price action rips right through your support level, contradicting the very premise of your carefully crafted plan. Instead of taking the calculated loss, your hand hovers over the mouse. You widen your stop loss, giving the trade just a little more room to breathe. Or worse, you double down, hoping a quick reversal will instantly erase the red screen. In the aftermath, it is tempting to blame the failure on the strategy itself. You tell yourself the moving average settings were wrong, or you misread the volume. But the math didn't fail. The pressure of hitting that profit target hijacked your executive function. Staring intently at the fluctuating profit and loss column takes a calm, analytical task and turns it into a panicked fight-or-flight survival response. This reaction stems from a psychological mechanism known as outcome dependency. It is an entirely natural human instinct. We are wired to care deeply about the end result of our actions, especially when money is involved. The problem arises when we tie our emotional state, and often our self-worth, to a macro outcome, like a massive end-of-week profit goal. When you are fixated on that larger number, every single micro-execution, every individual click of the mouse, feels impossibly heavy. That mental weight physically alters how you trade. It creates hesitation on valid entries, causes you to miss optimal setups, or pushes you into impulsive trading, rapidly firing to make up lost ground. Focusing all your attention on how much money you want to make actively destroys your ability to execute the steps required to actually make it. To fix this, we have to shift our attention away from the mountain of the profit target and zoom all the way in on a single, isolated decision. This is the mindset of one good trade. This maps a trade's life cycle. During setup, financial risk is an accepted constant. Your emotional baseline remains perfectly flat. In execution, even if price sharply drops, adhering to parameters keeps emotion steady. A planned loss becomes neutral data, allowing a clean mental reset. In an inherently chaotic market where price movement is unpredictable, the quality of your single immediate decision is the only variable you actually control. Without that reset, you risk falling into an emotional feedback loop. This is where the lingering frustration of a loss, or even the dangerous euphoria of a massive win, bleeds directly into your very next entry. Breaking that loop requires a physical pause. It means closing the position, taking your hands off the keyboard, and taking a literal breath to create immediate distance from the screen. This intentional pause acts as a psychological circuit breaker. It severs the emotional contagion entirely, isolating the upcoming trade as a completely independent event. By evaluating the next market setup untethered from the lingering stress of past results, your analytical clarity is fully restored. True trading discipline is not about forcing a flawless winning streak. It is about having the awareness to prevent one bad emotional reaction from infecting your next logical decision. To solidify this mindset, you have to change how you log your work. In your post-trade review, stop evaluating your performance by the amount of profit generated and start grading it entirely on rule adherence. Before your next session, commit to this one practical rule. Judge each trade by whether it followed the plan, not by whether it won. When you make this shift, your internal state transforms. You can take a standard mathematical loss and watch your emotional baseline remain completely calm because your process quality is still perfectly intact. You stop agonizing over the uncontrollable nature of market outcomes and channel all that energy into the fully controllable nature of your execution. Committing entirely to the mechanics of one good trade strips away the heavy pressure of outcomes and keeps you anchored in long-term executive control over your own actions. So, look back at your screen. Was your last trade a good trade before you knew the result?